What is going on, traders? Welcome to the top 9 stocks to buy for September 2021. The market continues to bust through all-time highs. As a matter of fact, the S&P 500 made 53 new all-time highs in 2021 alone, and we are up 21% year to date. In my last video, I talked about why the conditions are ripe for the rally to continue throughout the rest of the year, although not as strong as the beginning of the year to August. And as long as Papa J. Powell and the Fed play ball, the market should continue to see gains throughout the rest of the year, albeit modestly compared to what we saw from the beginning of the year to August. So enough of me yapping, let's get right into it. I'll first tell you some of the stuff that we did buy on the dip, because as you know on this channel, we always look for value. There is always a deal to be had somewhere. So we bought Okta on the overreaction, we bought DraftKings on the overreaction, Etsy, we bought Zoom the other day after it crashed below 300, we bought Apps, which is Digital Turbine. Buying blue chips on the overreactions continues to be the easiest way to make money in my view, and the best way to sleep at night, as opposed to trying to bag hold some of these penny stocks or more risky stocks. So we're up 20% on Etsy, 16% on Spotify, Netflix we're up 10%. We bought Salesforce at the breakout of this channel. We bought Amazon after it was just sitting like the lonely girl at the party at the 300-day moving average. My point is, it's very easy to dismiss boomer stocks because they don't move as much as some of these risky biopharmaceutical stocks or some of these penny stocks. However, those stocks are really made for gambling. These stocks are made for investing. If I bought Amazon at a 15% discount, I don't care if it goes down another 5 or 10%. I will buy more because I know that in 20 years, myself and whoever I spawn are going to thank me that I actually invested in Amazon back in 2021. So all that preamble is to say that there are always deals to be had, and this video will be no different. We are going to be focusing on looking for value on blue chip and or high quality stocks. Doesn't mean that we can't play penny stocks or degenerate stocks. As a matter of fact, we have a whole section for that on the Discord called Degenerate Member Trades, where sometimes I post as well. And by the way, if you want access to all of our trades, link is in the description below. We have over 4,000 people in this lovely community. Would love to have you. All right, so the first stock is actually one that we already played today, and that is Chargepoint, CHPT. It reported earnings, gave pretty decent guidance, and we saw it pop almost 9% today, bouncing off of the bottom of this channel. I also talked about Chargepoint being a potential beneficiary of the infrastructure bill that is about to pass. I don't know. They keep saying it's about to pass. I don't know when it's going to pass, but it is going to pass at some point. And Chargepoint, as well as other EV infrastructure plays, will likely be beneficiaries of the infrastructure bill because a certain amount of money will be allocated to beefing up EV infrastructure in this country. I still think that as long as Chargepoint is above $20, it is a good hold for the long term. Also, please keep in mind, these are not swing trades. We are talking about investments here, okay? So don't watch this video in 4 weeks and you buy Chargepoint after it's run up to $27 and then it drops to $23, and then you said, oh, I saw Chargepoint in the video. These are investments. These are not swing trades. Do not try to swing trade off of videos, mine or anybody else's, please, okay? Obviously, it's your money. Do what thou wilt. So that is Chargepoint. That is stock number 1. Stock number 2 on the overreaction, Zoom. Zoom is sitting here as support that we've seen all the way back to August 2020. Now, Zoom actually had its first billion-dollar quarter, as you can see here on this Market Watch article. However, Zoom kind of is seen as a sell the news situation because it has benefited a lot from COVID-19 tailwinds. Zoom got a $400 price target from Morgan Stanley after those earnings were reported. It is down 40% from the high of $568 that it achieved on October 19th. It could trade sideways for a very long time, but the price 40% down is too much for me to ignore here. All right, stock number 3 is Mastercard. Now, the traditional banks and the traditional card companies have actually taken a hit so far this month as of the time of this recording because a lot of the fintech firms are coming up with creative and innovative ways to monetize that these old school banks and card companies just have not figured out yet. So Affirm, for instance, the buy now, pay later sort of model. And yes, although credit cards are inherently that, they are still seen as rather old school and have not adapted to the times. However, Mastercard is down 15%. And as a matter of fact, the 300-day moving average has usually been the point at which Mastercard has jumped from going all the way back 3 or 4 years now. As a matter of fact, you have to go all the way back to 2016 at a point in which Mastercard failed the 300-day moving average rather significantly. So I don't mind buying Mastercard here. However, I will wait to see if it finds support. This is what you call a falling knife. When something has fallen and it does not look like it has established support, I want to see 3, 4, 5 candles at the same level before buying in. All right, stock number 4, also sitting right below the 300-day moving average, is Pinterest. Pinterest is down 40% from highs. Pinterest continues to see stellar growth with 83% year on year compared to a sector median of only 4%. And it beat its last earnings estimates by 88%, coming in at 25 cents a share. So already a profitable company, or at least a profitable quarter. So that is Pinterest. Stock number 5 is Vale. This is a Brazilian company. It looks like it's pronounced Vale. It is actually Vale, ticker symbol VALE. This has been a moneymaker for us in 2020 and 2021, and we followed this trajectory all the way until now. And it is currently now sitting at the 200-day moving average once again. This is one of the biggest companies in Brazil and definitely one of the biggest iron ore manufacturers. It has 74,000 employees, almost $60 billion in revenue. It's one of the highest rated stocks on Seeking Alpha for all metrics, really: value, growth, profitability, momentum, and also revisions. It currently has a 9% dividend yield, and it also looks to benefit from the infrastructure bill, even though it is not an American company, but it will likely supply a lot of the iron necessary in order to build up that infrastructure. It is rated as a very strong buy with price targets coming in from Jefferies, UBS, Barclays, RBC Capital, Bank of America, all iterating a buy position with various upsides, but anywhere in the range of 15% to 40% upside from current prices. And if you want access to all of the tools I use, those links are also in the description. All right, the next stock on the list is NIO. NIO coming off of a $35 low, sitting at the 300-day moving average. This is usually an area that we see a lot of volume. If you look at the volume profile here on the right, this little gray thing. We sold cash secured puts on NIO. Those cash secured puts are already up because NIO actually saw a price boost, obviously going from $35 to $40. It has also recently seen a slew of buy recommendations from Morgan Stanley, Citigroup, Bank of America, Mizuho, etc., with an average price target of $66. Now, all of the Chinese EV manufacturers, including NIO, actually saw a slowdown in deliveries. However, they blame this on the chip shortage. If you look into it deeper, you will actually see that NIO's new orders reached a record all-time high in August. So the chip shortage actually affected the planned deliveries, but the demand for NIO continues to go up. Now, that is part of the reason that NIO's stock price has stagnated as of late, as well as some of the other Chinese EV manufacturers, is because of the chip shortage. So sitting at the 300-day moving average in the 30s, I relish the opportunity to buy NIO here for the very long term. It is also somewhat obfuscated from the Chinese FUD drama, right? Because NIO is seen as a darling of the CCP and a company that the CCP want to use as an example that it can compete in the EV world outside of China. All right, the next stock is SOXX. This is iShares Semiconductor ETF. I talked about this. It might have been on a live stream when we bought it on the 100-day moving average. However, now it looks like it is creating a double top. I actually, hear me out, would not buy this here if you did not have a position. I would wait to see if we can get a drop to one of the support levels, at least the 50-day moving average at around 450, or maybe the 100-day moving average at around 439. But the reason that I'm very bullish on semiconductors, and again, this is for investment purposes only. Actually, this is for entertainment purposes only, but I'm calling these out in my view, as investment candidates, not trade candidates. Now, the reason I'm so bullish on semiconductors is because the semiconductor industry is actually looking to double in revenue between now and the next 10 years. There's a great article in Barron's that compares the chip shortage to the oil shortage of the 1970s, when oil saw a spike that was irreversible. Either way, everything from EVs to appliances to quantum computers to rockets, everything will require a semiconductor component. So I definitely want to be in the SOX ETF for the long term. However, as I said, I do want to get in on a better price. Now, you can always eat dollar cost average into something like this slowly over the long term, or you can wait to see if we do actually see a drop in price or some sort of correction in the market before jumping in. But this is definitely a candidate on my list, along with some of the index ETFs. All right, the next stock on the list is MP Materials Corporation, the rare earth mining company. saw a retracement from a high of over $50 back in March, currently sitting at the 200-day moving average at around 33 bucks. It recently beat out earnings, is seeing a revenue growth year on year of 118% compared to a sector median of 13.5%, and it will also likely be a beneficiary of the infrastructure bill. The last stock I'll talk about is SoFi, sitting here at major support post-IPO, trading at around $14, seeing an interest with regards to volume again. It was dead for a very long time throughout most of 2021, and we're seeing large amounts of volume here, creating a double bottom recently. And if we take a look at the options market, which we sometimes use as a barometer to see what the market sentiment is surrounding a specific company, you could see that there's insanely bullish activity here with $5 million in notional bullish contracts in the options market, with only $488,000 in bearish contracts. And if we take a look at the open interest, you can see that there is a ton of call buying happening right now on SoFi, with just today almost 9,000 contracts opened at the $15 strike price for the September 10th expiration. If we take a look at September 17th, which is the monthly expiration, you see a lot more in open interest, almost 21,000 at the $15 strike price. So there's a ton of bullish activity coming in for SoFi, meaning that the market could determine that this is the bottom here. Now, keep in mind, that does not mean that this is the bottom. It just means that there are a lot of data points pointing to the fact that the market thinks this is the bottom, if that makes sense. Okay, so don't come here saying, oh, you said this was the bottom. No, but we can work off of educated guesses. And right now, based on the data points we have and the way that the chart looks, the market factually thinks that this is the bottom. Whether it is the bottom or not, who knows? What we went ahead and did on SoFi is actually sell cash secured puts, because it's a lot easier than trying to pick whether you should buy a large amount at this price or not. With cash secured puts, you can actually name your price, but I won't get into it in this video. I talk about it all the time. However, in comparison to some of those old school banks, I do like having a fintech company like SoFi here. Now, a couple of bonus trades. Speaking of fintech companies, I'm looking at Robinhood here. We actually sold a cash secured put on Robinhood. We are up over 15% on that. The IPO underwriters are actually buying back 4.4 million shares of Robinhood. This came out August 30th. This was expected to close August 31st, so a couple of days ago. This is usually bullish activity when institutions and insiders buy a large amount of shares or buy back a large amount of shares, because they are taking shares out of the market, thereby increasing the value of the current shares that exist on the market today. And this is the longest period of sideways trading that Robinhood has seen since it IPO'd. Another stock that I'm eyeing very closely, which we own a lot of, is Palantir. Now, the reason that I'm eyeing it is because it is forming this long range inverse head and shoulders, which is a very bullish pattern. Now, what I expect is if Palantir can actually break out of this, cross into that $28 trading range, then we will likely see Palantir cross into a new paradigm, a new landscape. It will likely be trading in the 30s from now on, as opposed to the low to mid 20s. It just needs to break out of this pattern for more than a day and trade in the $28 range for quite some time before breaking to that new ground. And obviously, there is way more than 8 or 9 stocks to trade in the market. We've talked about travel stocks before, recovery stocks, hospitality stocks. Obviously, we talk about mega cap growth stocks all the time, whether it's AMD or Nvidia, Microsoft, Apple, etc., Amazon, which I've called out a million times. I'm actually tired of calling out at this point. But yeah, this is just a quick summary to give you an idea of what I'm looking at and how I look at it. If you got anything out of this video, leave it a big fat thumbs up just like this. Leave it in the comment section below. Let me know which one of these stocks you are trading. If you want access to our lovely trading group, link is in the description below. If you want to learn how to trade options, there is a link to a beautiful course where there will actually be a Labor Day sale starting Friday, September 3rd, running until Monday, September 6th. It's $100 off. So find that link in the description if you want to buy the options course at a discounted rate. Subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.